Well, now that the Fed stimulus plan will end and super low interest rates will go eventually higher, what will the impact be on housing? Diana Olick joins me now from Washington. So, Diana, first let's just look at the past. I mean, did these lower rates really boost home buying over the past 6 years? What have you seen?
Well, not home buying so much. What they really did was to help millions of borrowers refinance into lower rates. We saw rates go from just above 6% back in 2008 to as low as 3.5% just a year and a half ago. That, again, helped people refinance, but it didn't necessarily push as many home buyers as expected. What we did see, though, was other stimulus from the government, being the first-time home buyer tax credit. That really juiced home buyers briefly in 2009 and 2010.
And were there any negatives to all this? What was the downside of these super low rates? Were there any adverse effects that impacted housing?
Well, for one thing, a lot of investors were seeking yield. And so because they couldn't find it from the government, they went into real estate and they started buying up on the very low end of the market. Now, that was arguably a very good thing because they bought all those distressed properties and helped put a floor on home prices. The problem was that investors had all cash. They bought so many properties, competed for these properties, and pushed home prices up much higher, much faster than expected and faster than normal income growth. So now home buyers who are coming into the market, mortgage dependent, are looking at far higher home prices than they expected. So that one really turned out to be a double-edged sword.
And now going forward, we know that mortgage rates eventually are going to go higher. And what is that going to do to home buying? And especially now that the Fed is going to be out of the picture and is not going to be buying any more bonds.
Well, we already know rates jumped higher just this afternoon after the FOMC announcement. We know that they're at the highest rate now in just the last 3 weeks, but they didn't jump dramatically higher. They're still hovering near 4%. We will see rates inch slightly higher, but it will not be a big dramatic move. And what's important to note is that it hasn't been the rate, but the credit availability that's really affecting home buying today. It's buyers who need to have good credit. They need to have a down payment. They need to have full documentation. So I don't think we need to worry quite as much about the rate as we do about that credit availability going forward, Susie.
Absolutely. The process is really long for any of us that have gone through all of this. Thank you so much. Diana Olick in Washington.